Good morning. What's going on, everybody? What is going on? Happy Tuesday. Happy Tuesday. You made it through Monday and you made it to Tuesday. Congratulations. Congrats. Here we are. What happened yesterday? There was a lot of buying. Why was there a lot of buying? Well, this is how people are. Once price starts to get moving, breaks out, then everyone starts to go, oh, shit. Price is going up pretty quickly here. I better start buying something. So everyone started buying. Mostly everything. We saw the Dow lead in the morning. Tech continued into the afternoon from the morning as well, but value into growth. Growth continued. A big day, right? Continuing the breakout move, continuing what we understood as a consolidation, proving the consolidation, proving the idea of a break here in a rally. Now it's important to note that everything's at all-time high besides the Nasdaq, right? Nasdaq is still chasing that all-time high. There's a couple different scenarios in terms of getting there, right? In terms of getting there, futures are basically break even. This open basically break even. Uh, there's not much to see there. There some Nasdaq's basically break even. The rest are down a quarter of a percent. Not very much again. To be expected, right? An expected move here, even with Asia and Europe doing extremely well, right? So one thing to note here is we talked a lot about the Hang Seng, Asia, that this was gonna continue, and that growth is gonna come back. Now this even came with some. Obviously, the Hang Seng is not reacting completely. It's a little bit outside of China, if you want, but I mean, technically, the economy and everything's connected there. 2% on the Hang Seng here. That's great confirmation of the idea. That's exactly what you'd expect, and it looks like there's just more, right? There's just more room here, and so that's what we need for that side of the aisle in terms of tech, because we understand that there's some sort of connection here between growth on our side and in China, because our companies don't just operate in the United States, right? Uh, unless you're, a boomer from the middle of, I don't know, Kentucky or something, uh, you don't realize that the world is globalized. Well, this is very much a part of our market. So Hang Seng did very well. Europe's at all-time highs as well, and so this is when we talk about it, right? It's futures are up based on that. But yes, we have some take profits due to the big breakout day yesterday. Not breakout day, but just big buy day. So you got to put both of those together and understand where exactly we are truly opening up. Yeah, it looks like prices are opening down. A lot of that, again, is just tied into price from yesterday. So again, it's not like your price is now going down or something, right? Not until price goes down are we going down, right? Keep that in mind. So growth looking very good. Great confirmation. That opens up a lot of different things for the Chinese tickers, things like BABA, JD, PDD, Billy, those tickers that we want to be involved with, because there are a lot of points to pick up there, and we're running out of space to pick up on our own growth tickers, right? You have things like Google yesterday that put on over 4%, almost almost the coveted 420. It's a lot of points, and it's happening in all-time highs here. Now, you do have things like Apple that there there is more room to pick up points here, and that's why we took this sort of trade over preempting something like Google. Obviously, we had to get a part of Google because it offers the opportunity, but there's an understanding that this kind of idea is something that the market does better, at least, is being able to catch up. There's a bit of a catch up mechanic on the market. And so we understand that, okay, well, this is shit. This is dog shit. But this breakout here, it's following a market. There's going to be some room there. Facebook's a very good example where we captured this move. Again, 3.5% yesterday. I mean, these are big buy days. I mean, you don't just get, you got to put it in perspective, right? You don't get this trend here and then get another 3.5% yesterday on Monday, unless there's an expectation that price is going to keep going quite a ways. because you would not be willing to put on that much. That's again, these mega caps, it's a lot of money. It is a lot of money. These are the biggest companies in the world by valuation. This is a lot of money, right? To deal to push price like this. So you got to keep that in mind because it's not like, well, we're an all-time high. That was it. Good job, everybody. And articles and shit will do that once price goes to all-time high, and then you have take profit. It's like, well, we couldn't sustain the rally. Uh, okay, that's technically true. It didn't continue. There's some take profit there, but that doesn't mean that we're done, right? Are we done? We're probably not done, right? Price doesn't just stop for no reason, right? Now I posted the Amazon chart. This uh, I talked about was not really an opportunity. They're really the only time that we had an opportunity was there there once the rest of the market started to make its move and we understood that growth was going to break out. And the reason why Amazon was so different was this whole fucking bunch of supply in here, right? And we talked about this that this move, it kept coming into this lower end of the range, and you really can't take this. Okay, you can take the trade at a lower end of range and take the support, but the problem is the way that this comes down in here. There's an understanding of supply in here, but these dips down here, they're not they're not consistent. Right now, we had a bit of a diamond over here. It didn't hold or anything, so we continued consolidating. It was all the supply in here, and so it's understood that you really couldn't take that trade underneath these levels because you just kept getting pushed down, pushed down, pushed down, and so it's not the same to go take the Amazon trade over here as the other growth tickers, right? That's not to say that Amazon's not good, right? I mean, there's no reason to say that Amazon's any different than the other mega caps. I mean, there's literally no difference. It's just the way in which it's trading technically right now. And when you think about how it's going to retrace, Amazon is a little different. This is September. This is September over here. Amazon ran pretty damn hot. It ran pretty damn hot. And so you still have your all-time high from September. It's not from November, December, or from January or February. It's from September. So there's there's a little bit to work through. This if you look at this today and you look at it in the sense that okay, we actually cleared a lot of supply all in one day. Okay, it offers the opportunity here. This, I'm just being conservative here. This is more to back up the whole idea that Nasdaq itself is going to continue because you need everything moving together, right? And so keep that in mind. It's not so much that, oh well, now I can go buy Amazon. I mean, there's probably just better shit to buy, right? There's just better stuff to buy. It doesn't mean that we can't or that we shouldn't be aware of it, though, right? It still needs to be on the mind. Now, the last Nasdaq mega cap that needs to make its move is Tesla here, right? Now it's trending up, it's breaking out. Over here, we were taking the same trade that took longer on the EV side. EVs were a bit delayed. Why? I mean, it doesn't, there's not really an answer why it took a few extra days for EVs to get its trend started. It's holding the trend in the same way. And so in terms of this move, obviously I posted a ton of ARC charts. I posted like I think all three of the major ETFs now. I posted ARC W, ARC F, and ARC G now, and so ARC is going to get an inflow. It's the same idea that Tesla's going to get an inflow here, and again, it's the same idea that growth is making the same breakout, and so again, it might be delayed, and this move might not look as quick, but this move is still happening, and so when we think about the EV space, it just kind of happened on a a different delay, right? And so things like F that we talked about, I posted the F chart last night as well. I talked about some of the difficulty of yesterday and why it was you didn't need to take the trade yesterday because it's not like the price is going to stop and you don't have a chance, right? It's not like you can't go take this trade, right? Price will continue into highs and everything else, right? It's not like in 5 years we have to stop trading. But I did talk about a little bit of how this trade yesterday is difficult. Some of the things that you can do in terms of being able to get that trade on the break here, because it is a bit of a uh, again, it stands out on a in a hindsight and on a daily candle level, but on an intraday level, it's very difficult. But if you are able to take that trade and price does break this resistance here and continues this trend going through this week, then it's gonna feel like a missed opportunity if you didn't take the trade over here at a point at which you could. And it's not so much that it should be clear that, okay, there's a trade there. It's more that, hey, man, I just know I want to buy this. And so if I know I want to buy something, then I just need to do it, right? And it's not going to be perfect, right? It's like when we preempted trades, it's not going to be perfect. We just know that we want to be a part of it and that something is going to happen here, right? Everyone can see the tightening here. We knew that EVs were a little bit delayed. Is it not going to happen? Is it over with? I mean, there's a lot of different ways you can look at it, but at the end of the day, uh, these all are sort of making the same move now. I want to keep sort of some ideas in mind is that some of these charts have, so when you look at Tesla has that trend, growth has that trend. Some charts just have this big candle here, and it sort of makes up a few days of price action. Remember, it's about a relative price action. So something like almost 4.5% here on Ford is a lot of points for this chart, right? It's a lot of points for this chart. And so this almost makes up a couple days of price action on a trend to the upside. So when you look at this chart, it does feel a little bit cramped, right? When you look at price, it leaves a little bit like to be wanted on sort of some price action to the upside. You have to keep in mind that this is at a much higher point. It's traded much higher, much more bullishly than the other charts. And so you got to just keep that in mind that those other charts are down here in a technical standpoint and that this has already been doing very well. And so it's not going to look the same, but you need to realize how similar it really is and how that price action is really just being encompassed in a shorter time frame. That type of tempo change is really not the easiest thing in the world to see, but again, it's important to realize that all this shit is it's all the same, right? It's all the same. It just may look a little different. Uh, Chris Chris has got some free market action. Otherwise, we like Chris, but he's the only one with a 3%er. Nothing else is actually happening pre market. Uh, from my knowledge that I can see, there's things like Biles and stuff making moves, but there's not really something to talk about. The one thing to talk about is energy. Another boat did get stuck in the Suez Canal. Not an April Fool's joke. Uh, another boat lost power. It didn't block the canal. But crude prices are up. I was this. I obviously just don't understand it. And I don't. I mean, the reality is that the market doesn't understand either. What this price the trading it is over here. There's so much trading going on, but no one really understands where price is going to go. Everyone has an understanding that price is going to go to the upside. But what's happening in here is that there's a bunch of speculation going on of how much it's going to go up. Because again, this is you trade oil on in the futures market, and so everything is based on future contracts. And so the pricing here is in such a future. I mean, it goes with the name, but it's not really pricing at this moment. And so you can get some pricing that's more short term and active. But then what will happen is that you'll immediately start to get pricing for sometime who knows how long into the future. And so you get a day like this yesterday. This it really begs the question of, well, is this almost 5%? Is this a breakdown candle that is like a bear flag in here and we're going to come down? And then you get a day like today and you've ate up about half of that, up 2.5%. This type of shit here is really hard to deal with. And so again, we need to be very careful with anything that's on the energy side. We talked about a little bit over here. This is a lot of short-term volatility that we can't deal with. There's just nothing we can do to deal with it. And so the only thing we can do is have long-term trades or leave it alone. And so just keep that in mind for some of the energy, because this kind of day is just a chaotic sort of random day. It's a chaotic event that comes in and spills in from a futures market that you can't predict, you can't control, and then you're not going to be able to save yourself. There's nothing you can do because it immediately just affects your contracts because again, options don't need to be The market doesn't need to be open for that pricing to hit the market as soon as it does open. And so this kind of thing is difficult. So we're going to kind of refrain from some of that. There's there's plenty of long-term opportunities where you're completely fine, but the short term, this is way too much to deal with on something that you're buying, not to have big drastic swings back and forth. That's way too much. It's going to be interesting to see what happens. Again, you saw it on clean energy as well. You had a bunch of tickers get just blasted, right? Just completely blasted. Uh, there's I mean, there's a lot of different examples of these candles that this is a it's a bit of unpredictability, and it's hard. It's difficult trading because it's you could be in a good position and it's like, well, I'm kind of right on the edge of what I can hold here. Keep that idea of there's things that are out of your control that you don't really know. And the market doesn't know, and there's uncertainty, right? Uncertainty means consolidation. In my mind, uncertainty means consolidation, and most consolidations are just uncertainty because people are buying and selling a lot quicker, and that causes that tightening and that consolidation until something happens. Most of that's going to lead to the upside, so there's potential for further upside, but keep that in mind, of course. Thoughts on Twitter from yesterday. Twitter, obviously, I posted the chart. Twitter, I did talk about yesterday about the support buy down in here, but I didn't want to take the buy because it was on the trend line, so we need to wait for a trend line that was at open, and so then we get the break here, going into further, and I mean, there's nothing else to really talk about. I didn't want to take the support buy here, but there's a trend line break here, and we expect Twitter to go with Facebook. We expect Snap to go with Facebook as well. So those three are all very bullish, and so there's nothing different about this chart since when I posted it from the weekend, which is yeah, so bullish. Good job. I mean, you could have bought it yesterday for sure. Could have bought it yesterday for sure. But it's not like it's not like, oh man, I missed it. It was only up 0.5% yesterday, right? Only up 0.5%. Okay, we have 10 minutes here. Uh, what we something to note again that's so important is that the market did not react to yields yesterday, and yields right now they're just all mixed bag. It doesn't even matter now, but it's really important to realize that for a couple weeks, right? We bounced around on the growth side and the value side because of yields, and a lot of you didn't even need to you don't even need to Google yields because now it doesn't matter, does it? All over here, growth was getting beat up from yields. So the fact that they're no longer even making any sort of reaction, any sort of reaction should give full confirmation that we've just established a baseline of understanding that inflation is going to exist and that this is just where we're at, right? The economy's going to heat up, and that doesn't mean that growth can't do well because the growth never is pricing on right now. It's always pricing into the future. So it was just during this time that I was like, well, this isn't the greatest for us. As soon as that gets priced in, and it did, price is going to continue here. Now, this is not to say, and I talked about it a little bit, but as we go through this week, it's not to say that you still can't get affected by things, right? We've basically priced in that whole idea of yields, okay? And yet the fact that, okay, inflation is going to be here, there's going to be a lot of spending. That doesn't mean that there's not going to be effects that you see on individual sectors. Uh, think of solar yesterday. Why is it that we just got a big bill coming from Biden that we're spending trillions of dollars again, and there's even clean energy in there? Then why is it that clean energy didn't do as well yesterday, right? You look at something like, I think ICLN uh, is probably the best example because it includes things like plug, the different intermediaries, and it includes the solar. It's just sort of a more broad base. So there's like TAN, that's the solar, just only solar, but something like ICLN is sort of the full picture, and I think that's an important thing to note. And so when you look at something like this is still getting affected, right? It's not getting affected by yields, and it may not be getting affected by some other idea, but it is getting affected by some of the new uh, new sort of components that are coming out here when we start to see where the money's going, how the flow might actually happen, and then how also the rest of the market's reacting. Because now what's happening is you're seeing the mega cap rally come through, and if the mega cap rally is coming through, then now what's happening? Well, we're betting on the players that are already here. And what is clean energy? It's the player that's going to be. They're sort of on deck. They're not actually here yet. It's not really it's not the thing yet. These companies are worthless. They don't really do anything yet. Most of these companies don't do shit, right? And so, not to be all fundamental, but let's be honest, there's a difference between a realized value and this idea of a future value, that it's not so much living up to expectations, but it's how much money is going to be there for that. Once you see those numbers, you realize that this is where it's important to start when we look at these numbers. $2 trillion is a shit ton of money. $2.25 trillion is a shit ton of money. But when then you go in and be like, well, 500 billion? Is 500 billion really that much money? I mean, it's a ton of money. It's a ton of money. Imagine if you were worth $500 billion for an entire US sector. You start to really wonder on some of these, right? Because and that's where some of the pricing came in, and you have to just think about it, right? Some people were unhappy. Some people are unhappy to see some of the numbers, be like, well, that's not enough. That's barely any money. What are you talking about? The idea is here is you have to understand how moody the market is. The market's very moody. Look at the bond market. Bond market doing all that shit with yields and fucking around with the price to get the Fed to do something, and then the Fed didn't do anything, right? Think about how moody the market is, and then how you can negatively react and have a poor reaction to what you see, right? So we're just digesting that spending, but it doesn't. Again, this is not the overall. And I want to say this because these offer opportunities when you get this short-term volatility of a negative reaction to digesting information, because the market's really bad at digesting information. Why? How do we know? Uh, have you looked? Have you looked at the Nasdaq? Right? Have you looked at it? They're pretty bad. Imagine selling all the way here and then buying over here. Right? It doesn't. Again, it doesn't add up. But this is how we are. We're really bad in the moment. We're going to continue to be bad in the moment. It's not going to go away. Again, when we go into all-time highs, it gets worse. It quite literally gets worse. Nasdaq is going to be terrible up here. There's going to be a ton of volatility. There's already, when you look at the spot VIX, there's already again, there's always endless amounts of short positions against volatility, betting that volatility is going to go down. Right now, they're all being taken off because it's already at such a low over here, right? We're coming back into the teens level, right? And so all of the short volatility positions are coming off. Not all, but a significant chunk of them are coming off, because what's going to happen? Well, technically, volatility always goes up in the future and is always constant into the future, because you never know what's really going to happen. And the more time that goes on, the more tail risks that are involved, right? And so, again, there's always more. And so that's where, when you start to react negatively, where's my goddamn chart? I have you guys on a couple different screens. When you start to react negatively to something that's actually, it's actually positive, we have to keep this in mind. We have to keep this in mind. And so maybe we have to pick our spot differently on some of these ideas. But it's important that when it does come, that we are aggressive. We're very aggressive, because it's it's again on some of the, especially on the clean energy, and again semiconductors are where we're kind of going with this. When there's some pricing that happens and some action based on some sort of event, and then the reaction is one that doesn't actually it doesn't add up. It's not, the common sense doesn't really add up. It's like, oh, you're going to give us money and so the prices go down. That doesn't add up. And so you have to be ready to take advantage aggressively when that move is ready to go the other way. So something like this with support, right? Heading to the upside. You need to be ready for that, and to be, again, not to dick around and sit there for a little while. It's to take advantage of it, because it's the same players in here that will then go and push the price, because, oh, now it's moving. Oh, I guess, oh, I guess the market actually thinks something differently than, oh, this was a good thing. It's endless fucking spending. Everything's going. There's nothing that's not gonna go. There's literally nothing that's not gonna move. That we're all there's nothing that's left behind in the market. There's nothing. It's only as strong as its weakest link. The weakest link is being dragged by its ankles right now and being thrown over the goddamn wall. I mean, there's nothing else happening, right? This is where we are, and so again, this is where our chimp brains really come in, and where we can throw a dart. You could buy anything and you'd be fine, right? You could literally buy anything and be fine. 2 minutes, 2 minutes. I'm interested to see what our take profit is today and how we react to confirmations from Europe and Asia. Again, Europe is more value based, Asia's growth based. Both are just popping off. Europe is all time high, and it's so strange that Europe is such a small equity player, and it probably doesn't need to be that way. But I mean, with Brexit and everything else, they're just fuck. I mean, one bad thing to another, right? I mean, it's it's weird to say that we're more stable, but I mean, let's be honest. Uh, I mean, we're just way more stable. So for whatever reason, uh, and so there's still some ideas that Europe should be bigger. There's more countries, there's more people. Uh, I would just keep that in mind that Europe should bounce back, but be doing better into the future. Even though they're all value based, they should be doing better. And so, uh, we're gonna continue to see how that develops here. And something to think about. Europe. Why is Europe so small on the equity side? Not sure. Yeah. Again, I have you guys like mirrored. Because I get sick of using two mouses, so I basically have you guys on a different screen, but I'm using the same mouse, so just to might look strange. Did it yesterday as well, and I know it looked weird. I looked at it and I was like, does look weird. All right, so we're holding from this. So let me get this up for you guys here. Again, like I said from yesterday, it's one thing to beat the market. It's another thing that you need to not screw yourself. And I mean, you can screw yourself, but I mean in the sense that you don't lose money and you make money, right? If you know that you can't hold through take profit in a sideways trading, and like this just opened and you just died because it opened 12 basis points lower, then again, you need to know that beforehand so that you can make a decision. Spot fucking taking off. Uh, Keep that in mind because again, today you're going to get take profits in different places and you don't know, right? You just don't know. It's like right now, travel making this move here. This is you just don't know, right? Don't know. The holding value. I mean, it starts to sell and you're like, ah, shit. Yeah, we got Gush up 3%, so we are getting that again. That bid on the oil side is very all over the place. ENPH is definitely what I want to see. Again, we are bullish on semiconductors. One thing to note is ENPH is a big part. It's the largest component of ICLN. Plug Power is also an ICLN. For an ETF, again, I don't. We like to use ETFs more as benchmarks. Trade the individual tickers. So trading ENPH here is just better. But again, these all got beat up yesterday. But if you look at these in conjunction and comparatively, you would have been more protected on the ETF, which is always the case. You take less risk for an ETF for more exposure, right? ENPH is a big part of that. Plug is a big part of it. And then you get solar companies and stuff there. But again, look at how, again, this is where that individual picker part, this is why you make more money because look at this shit. Not very good, but these are looking good. ENPH looks good from the start. Again, we are looking for a bounce back on clean energy because didn't have the greatest day. Didn't have the greatest day. Steel continues to go again. Some of these moves, I can't tell you why that people trade like this. It's just it's bad behavior, not in like a good way. It's bad trading. Uh, it's you know the spending's coming and you know there's more. It's not. It's more of a liquidity problem in terms of being able to continue the price move. Also, DMX is in a vegetable state, and so X is getting pushed down a little bit. Once X can give it to us, maybe X will give us more. Keep that in mind. But again, infrastructure, anything on that side. With home builders being the exception, home builders are uh, a little all over the place, right? There's a, so things like again, all of these sort of software companies I posted are doing very well. That's I post a lot of those, and it's hard to always tell because they're all so different, but they're all the same sector, but they're not fucking none of the charts look the same. So it's hard to kind of go with some of those, but uh yeah, you have to deal with it. Roku looking very good. AMKR, I posted the chart again last night. I posted it a couple times. It is the more bullish semiconductor. Uh, you gotta again everything that's going on with that space. You gotta understand how that supply being tightened and how this is a global issue is going to jack prices up because what's gonna happen? We're never gonna let this happen again. This is how the global economy works this way, where something happens, and if there's a shortage, they will never let it happen again. There'll be a fucking oversupply, which can cause prices to go down. But how long is it going to take for that to happen? And how long and how much money is going to be spent? A ton of money. A ton of money. That's going to make prices go up on the equity side. It's going to make it happen. That's just the reality, right? And I don't mean spending from them. They'll spend money, but guess what? Someone else is fucking paying for it. So some government, China government, US government, we're all the your taxes, my taxes. APA. This is a difficult one here. You have to. You don't have to do anything, but with the oil and different things, it's it's not easy. But there's definitely some things here that like DVN is a better example with support here. This is not easy, and to make a decision there is definitely not. It's not the same. You have to take into a macro component. So some of those that are at the top of the list, be careful on those. GRBK, this is okay. This is home builders, but you can see how much better this individual move is here on this ticker. Now this is the longer chart I posted from the weekend from uh from that last Thursday that we had the break here and we talked about some of those coming into going over the weekend. This kind of move here is that's a lot of points. That's going to go up to the trend line about 27 today. So GRBK, I mean, again, it's that kind of thing. And if you go look at if you go look at this is the average, right? We know it's been trending and it's very bullish, right? We use things like nail, for instance, right? We know it's very bullish, but it's hard to trade these. And that's what I was mentioning just earlier. It's hard to trade them. It's those individual companies where you can go make that move if you're not already a part of this, right? Uh, because again, it's hard to you can't get into something that's leveraged like this unless you're buying it on the pullback, right? Twitter making its move. There you go, Wiz. There you go. We'll see what the trajectory is here. This trend I have here, the trend line I posted on Twitter, is the usual slope, right? This is like this is your this is your angle on basically every growth chart, right? Keep that in mind because we've had this again. You're gonna get times when price is just gonna come up here and it's gonna be a fucking elevator to the top, right? You got to keep in mind that price doesn't move like that. It moves more on like this, but there's going to be price all around, right? Price will be all around here. Just keep it in mind. Keep it in mind because it's really easy to look at this and be like, well, what is this? This is 69 and go up to 69.90. I don't know. Maybe. But don't bet on it. ORI has a nice start. SE, again, these what are these companies? I have no idea, but it's these kind of moves here with open space. You gotta love that. SE looks very good. D now, I'm not sure. Seasick is stuck. Chegg is difficult. Red, we continue. So retail stores, we continue. Uh, this is a tough chart. Barely moves. Could be careful on ORBC. AVT continues. PSTH starting good from yesterday's charts. Forward, obviously, through the break. Again, this is where, I mean, this is why I said it. We didn't need hindsight capital to even do it, right? It's just hard. How do you do it, right? This is why, I mean, look at, I didn't even need to wait for it to do this here to then say it. If you didn't get that trade yesterday, it just makes this really fucking hard. Because here's your problem is you're sitting here for 0.5% plus another 10, 20 basis points here to get to the level, and then the level breaks, and then you're finding the option, you hit the button. And now what happens if it pulls down here? Well, now you're losing price on your options because you just bought it here, and your options are way past here. Now you're losing money on your option. It just, yeah, you have to take that trade, and it's a tough trade. You have to be able to take that trade yesterday. You have to. Or if you didn't already take it going over the weekend, which is what most people probably did based on the options. We'll see how this again affects all the VVs together. Z, of course, a part of all of that move as well. I mean, we're expecting moves here. Again, we have trend lines all up through here. This is very, it's got ladders. It's got rungs to climb, of course. Maybe the guys, the average. I like this I like this move a lot in terms of putting further all-time high on today. It's you don't have anything to work through again, right? You don't have any supply to work through. You're actually, if anything, you're creating new support over here, which the market kind of just does for whatever damn reason. Maybe we're all inside jobbing it. Shop is back onto 1145. Again, I talked about this a little bit, and I said yesterday that this candle pulling in, this offers the opportunity here. This is just, you either take it or you don't. And it's not, I don't think it's going to show itself again. When you look at these candles, you just can't fucking tell because the price, these expensive tickers, it's hard to tell. You have to just do it. This is your opportunity to do it here. It may not be today. It may not be. It wasn't yesterday. Yesterday was a bit of a cuck day because this shit opened and you just can't tell. You literally can't see it. Look at this. These are 15-minute candles. You can't see a damn thing. There's nothing to see. All you can do is be like, well, here's my dailies. Oh, if the chart loads. Oh, we're getting doxxed. Getting doxxed again. There's that goddamn internet guy. That again, that trade's it's it's available. That what's so funny about something like that is that, I mean, it's just so many points. It's just so many points, man. It just doesn't move. It doesn't move. But once it starts moving, look what it does. Once it starts moving, it's just, oh, it's gonna be hindsight capital. So if you're not gonna get into the position, then just don't look at it because you're just never gonna be able to get it. It doesn't, because I mean, again, it could just sit here for a month. Who knows? This is the plan, though. That's the plan. All right, Chegg is getting there. Comparatively, everything is a doji. Small caps, we're gonna see what happens at this level again today. Again, you get all those regional banks in here, and then you've got some oil components, which again are having a difficult, kind of a strange time. Banks are doing very well still, so TME, are we doing it? I know somebody posted something about Tencent. C Trader posted Ma Huateng, 66 billion for Tencent. Again, TME is not the full Tencent company, but it's the only one that we don't. It's the only Tencent ticker we have on the U.S. exchange. It's the Tencent Music Entertainment Group, but it basically gets traded like Tencent. So, yeah, we're going. Again, we everything from the Archegos shit we are actually buyers on, right? We're actually buyers on. So again, it's not a joke. Just again, FYI. You saw that we finally just got the Credit Suisse finally gave us the number because again, I talked about it. Archegos didn't own any of the shit. They obviously lost all their money, but they actually didn't own shares or anything. They were using swaps, right? And so they lost all the money that they had by using swaps. But again, it was Credit Suisse that actually had the shares on their books, right? And so they lost like 4.5 billion. Fucking, it's nothing, right? It's literally nothing, but someone lost their job. Someone lost their job though, so that's good. Good job, guys. You guys got rid of the guy that gave this guy that was worshiping God through trades a shit ton of money, and so you fired him for it. That's what you should do. We'll keep this again. We're bullish on this shit, so we're ready. Sono, all of again these companies that are on this growth side that are a little bit smaller, they sort of fulfill different roles, looking very good, very good. Gold is again. Hey guys, I posted the chart. There are opportunities there. We should mention the dollar a little bit. The dollar is continuing that move to the downside. Now, there was two things I talked about. I either talked about that this was going to continue and it was going to really push price down as money gets spent on things like the Hang Seng or on the Europe Stock Exchange. This is just a trend, and so this is more of a rollover. So it just means that we're being consistent with the idea. And I talked about that. As long as there's not like violent moves and violent changes, then everyone's in basically the same ballpark, and everyone understands the same thing, that the dollar, that it doesn't really matter what the value is or what the movement is, as long as everything's controlled, because we understand that this is actually really projected to be much further down because of continue increasing of the money supply, which means we're healthy. It just means that we're not going to be negatively affected by the dollar. That's the important part for us. VIPs as well. VIPs is possible, absolutely. This breakthrough here, all of these, Viacom, Discovery, I wouldn't sleep on it because I'm going to bring out Hindsight Capital next week and be like, duh, of course. That's why I bought it a week early. SQ is difficult. Dejar mentions. I mean, we wanted to be a part of it multiple times. There's plenty of trades that can be made down here, and there was plenty of trades that were made down here with PayPal. And I talked about yesterday. I talked about the relationship with eBay, for instance, right, and how eBay actually led everything out of here. This being popped out here, and also to Ecto your question. Those in see Ecto asked about like Tiva's breakout candle, for instance, right? This is another example where on Square Inc. you can be like, well, did this really break out here? And so same with Tiva. Let me just show the Tiva chart. So look at this candle, right? It didn't really break out much here, right? It's okay. Yeah, price came out, but didn't it come out over here as well, right? So here's the Tiva chart just to show. Here's the Tiva chart. Didn't really come out here, and look, it didn't even continue today. But what is of note here? What is of note is that based on where the candle is, price is going to open outside of the trend line. It's going to open outside of the trend line. Yes, it's more preemptive, but there is a difference between that understanding because it offers an opportunity from the open, which is how we trade, right? How do you manage this here? Okay. Well, we have an understanding that we're interacting here still and that we get a rejection from the resistance here, right? This is where things get really complicated because we're going to treat this differently over here, and we're going to treat it like a resistance rejection here and not like a trend line rejection here. Okay? You gotta treat it a little differently. The only reason we won't treat it that way is if price continues to consolidate inside here. But that would be, again, a different decision, and we would basically go back to where we are here. But then that just means that nothing's going to happen anyway. So it's a yes or no trade there. Squaring, same thing. It's sitting right on supply. The thing to note here is that it's just this horizontal resistance that's causing all of the drama, right? It's not the trend line, it's not the consolidation, it's this supply level, right? Same with squaring. So you saw on the TIVA chart, you can see it on the squaring chart. It's just interacting with all the supply in here, which means again that there's something to work through. But once you work through it, see ya, right? See ya. That already, if you look at that on the intraday chart, you're again, there's a big difference when you're comparing these, right? Very big difference. I mean, look at that intraday chart. I mean, that it begs. This just begs. There's interaction on the trend line, big bid under, like that's a breakout candle right there. That's a confirmation already for me. And this candle here tells me that there's interaction on this level, and that this is being turned into support right now, and that it's probably just gonna fucking take off. That's what, if you look at these candles, I think this should make sense. This is the open candle, opened above the trend line. Okay, confirming the idea I just said. Dojied and tightened with, I mean, look at this shit. Tightened right onto the trend line, bid off the trend line. Again, 5 minute, the lines don't look perfect. And then over here, the bid going on a breakout, price confirming down onto the level. It's very fast. It's very fast. If this goes bid here and continues, then there you go. Done. We're done. You got it. Right? When can you buy that? You're never going to. Listen, you're buying options over there. That is all the same fucking thing. This chart, this 5 minute candles don't exist on options. They don't exist. It's already gone. It's already going. It's already moved. People aren't buying options to bet on every 5 minutes, right? We're betting on the next month, next week, right? That's a good example right there, though. Because again, these new charts I have are, I mean, they're fucking not easy. I can sit here and act like, well, duh, but I'm not going to do that. No point. No point. Yeah, travel's still climbing through here. There's a couple things to see. I was gonna note the difference. We can use Expedia and shit like that. I can't really use that as an example. They're all climbing out, but it's, again, there's some of these candles from yesterday make it sort of, today needs to go, I would say today needs to post a higher high, and it looks like it's going to. So again, this move is continuing. What I want to note is that, again, we entered on this candle here, not perfectly. It's so important to realize that you have this trend though, and that you're continuing the trend, and that none of these candles ever broke the upside move, right? And so a lot of these are going to turn into upside breakouts, right? This move here to here, breaking between the resistance support. You got to stick with those positions or get a part of them, right? You have to. I mean, it's just too much, right? A good point out. Save, it's a good point. But travel itself, this whole trend here, you can't bet against that trend there. And you should be a part of it in some way. Should be a part of it in some way. You could even just use the Jets ETF if you want to be really lazy, right? You want to be really lazy, just use the Jets ETF. It doesn't matter. It literally doesn't matter. Again, we're betting on this move to go up. We're betting on value still. I mean, guys, the Dow's just been at all-time high every damn day. So again, if you just sit in this position, you don't have to do anything. I don't even need to be here. I'm just doing it because I have fun. COVID winners. COVID winners are really slow. COVID winners are really slow. Hard to say still. Again, I'm not gonna sit in a position like this comparatively, right? It doesn't make any sense to be here. Again, opportunity cost is probably one of the most important things right now, because you could be making a little bit of money on some chart, but make a lot more on another. You gotta go to the other, right? You don't sit in here in Etsy, go buy eBay. why would you why would you do it to yourself? Look, you may come back into the trend line. Take that on a trend line buy over here instead, right? It's really easy to look now back, but again, you need to realize it during the moment that okay, nothing's fucking happening. Yeah, something could happen. It could just start to go up. Sure, if it starts to go up, you can fucking buy it still. You can still get into it. No big deal. It's not going anywhere. You'll be there. You'll be here. Where are we on Snap? Okay, we get the Snap move. So again, I bet on the social media together. This is so much better. Just to note, um, it's actually I can't believe I'm making money on this dump chart too. This is not the greatest buy in the world. Um, I want to make sure that this is understandable and that you could see how this is converging to that Facebook chart. Nothing to do with Snap. It has everything to do with that sector. The way this is all growth is breaking out together, right? Growth is breaking out together. They all have the same trend lines, right? You can draw this trend line in for Snap. Look at where it opened. Opened right on the trend line. Right on the trend line is where it opened. And then you need to understand, of course, that okay, all the growth is opening, but then Facebook is sort of this leading factor. It's just, it's so far ahead the rest. Says Google. Plug, still waiting. Demas continues. Again, I talked a lot about that 130 level yesterday. We confirmed it, right? We confirmed it. Here we are from open, continuing to move. That's where confirming the support becomes critical because today, if that opened lower, you didn't need to do anything. You have support underneath you. Turn that baby green. That's a nice trade, and I think it's a nice chart. It's a little bit you're betting on speed a lot more because it's a flag, so you're betting on a short-term move. So you're almost done with this play, right? You're almost done with this play. The next time this doesn't continue up to the upside, again, you take a trade like this. This is a short-term play. Okay, it's a short-term play, so you get you have shorter dated contracts. As soon as that thing doesn't continue, you're taking the profit. Today, though, is a good example of where that's the mulligan for it, right? You get the support. That's it. Next time it does reverse or anything, consolidate. You take the profit on that. Look for the next opportunity, right? Because the next opportunity is completely different. Completely different. This is the short-term play up to the high, and then you take the next trade. You could take them both at the same time, but our cash is a fucking resource, right? Our cash and time is a resource. Uber, I talked about this a little bit, right? That you can take the trade from the lower end of the range, trade it to the resistance, and then the trade is above that as well, right? Now, growth is going together anyway. So some of these comments, again, in hindsight, are going to look silly, but that's just, yeah, we expect Uber to go up, but, where are you buying it here? If you didn't buy it already, again, when we bought everything over here, if you didn't buy Uber here, I'm not going to buy Uber here, right? We like Uber, though. We do like these charts. They're not connected. Lyft, for instance, this tightening here, it's just we want to be in here. Absolutely. If it makes the move now. See if those continue. Chewy and shit like this, I mean, it's not good enough. Not good enough. Gotta be better. 10. If you didn't take this trade or like DraftKings on support, I'm not a big fan of buying here in the middle of nowhere. DraftKings is a little bit better because of the way it's situated with this sort of local area of supply. It's a little bit better in the way it's sort of consolidating here, and then it might offer an opportunity. But again, this is where it's so hard to manage a trade and get into a trade if you didn't already take it on that opportunity, which you're never going to get every single one. We have other positions. But just to mention some of those retail, because we traded those a lot, right? Uh, these oil companies, we're going to be watching for all of them for that resistance. So things like DVN and Cal and the whole damn sector, right? The whole damn sector. Our VLV is already at 9%. And all of these internet companies, all the growth companies, see a lot of bid coming in on that. I mean, everybody's just buying. Another day of buying. TLNT, nice call up by JJR. And that value side. The thing to note again here is that why? Why? What is that price action? We took the trade over here, right? We have it on the other chart. We took the trade over here. What is this? Why? Did somehow in February and March, did we all of a sudden, the economy wasn't going to open back up? Vaccines weren't going to happen all of a sudden? What? Why? What is the point? There is no point. There is no point. What's the point of selling all this if you know everyone's just going to speculate and push it up again anyway? It doesn't make sense. This chart's a lot of volatility and a lot of fun. And we were having a lot of fun back there because we were joking about how you're going to tell your friends that you got rich by trading Planet Fitness stock. But yeah, I traded call options in the hundreds on PLNT, Planet Fitness, while I was on a Planet Fitness treadmill. Yeah, yeah. And I'm too poor for a Peloton. I use the $10 a month Planet Fitness. I am a black member though. MGP is disgusting. We can't talk about that one though. MGM, MGP, box. Who's the all time? Who's the box trader in here now? I posted that MGP chart, right? Or no, I didn't. I stopped. I didn't post it. I just put the ticker in the list for us. But if you go look at that MGP chart, you will see the pattern and everything there. But I'm not gonna put that there. I only trade one ticker now, box. David is our box trader. David likes that box. I like the box too. Box is good. Box makes me happy there. Okay, let's see. Shh, don't tell anybody about this Baba move, guys. Do not tell anyone about the Baba move because they don't realize it yet and it hasn't actually moved yet in relation. It's actually got a lot more further to go. I posted there was only one it was funny, I was doing my list for short-term patterns last night and I was copying the list from I write all my short-term patterns down on a notepad and then I type them into the Google Sheet. I only wrote down one from last night, Baba. And then I started copying all the other ones from last night because I just have it all on a written list. I was like, oh, fuck, this is the only one. The only one, this hammer. Don't tell them. Shh, don't tell them. That's disgusting. This disgusting move. Again, I hate the price action. It's so, I don't even know. It's so bad. It's so bad. I mean, it's just terrible. It's quite literally terrible. It's terrible price action. But here we are. You're at support, and what Baba and Tencent aren't going anywhere. They're not. They're literally not going anywhere. Alibaba's not going anywhere. Tencent's not going anywhere. That's the reality. In Jack Ma, Alibaba, in that whole group doesn't need Jack Ma. Jack Ma, have you ever seen an interview with him? He's a moron. Like, I'll say it confidently. I'm pretty sure everyone in this chat is smarter than Jack Ma. I'll say that confidently. I don't care if you're the CEO of a startup company. The guy's a moron. It's like the guy from Archegos. The guy was literally an idiot. Like, I don't mean to be mean, but the guy was obviously not. He should not have been in a decision making role, and that's the problem with those family offices. Those family offices are famous for having terrible decision makers. Jack Ma is no exception. Jack Ma is he just Jader says I'd rather be dumb and rich. Yeah, I mean, I'm sure he would too, but wasn't he just running from the government? Yeah, smarter than yeah, that's gonna be Ecto's new Tinder profile. Smarter than Jack Ma and that dude from Archegos. Can we see your year-to-date trades, please? Exactly. I only make trades based on God's will. That's the Archegos guy. S-Fix. More retail stores. More retail stores. Maybe more for here. I don't know. That's a weird trade down there. But there's still some retail stores that were pretty far behind. We'll see how much. Again, Gush is sort of my go-to on oil if I know what's going on. I don't know what's going on other than I knew prices going up in the long term. So take what you want with that information. Don't know what's going on in the short term, but I know what's going on in the long term because there's literally no way around it. So yay us. Spot is continuing here. This is a great trade so far. Fuck. It's a great trade so far. Again, this is hindsight. It's really easy to see the pattern here in the consolidation. And the breakout's super obvious, right? This is not like the TIVA or SQ. This is obvious. But isn't it nice when you get it really right? And it's so obvious. There's no doubt ever. Oof, feels good. That's a nice one. Really nice. Amazon and Apple moving, AMD. Yes. Yes. I posted the Amazon chart so that it will move. We're through 3240. If yeah, we're gonna call it that. I mean, I was just say the 3284 here. It really is the last straw in terms of getting Amazon to get going again. And I say that you obviously have the highs over here, but there's a lot of reason why these highs got stopped. Right now we're in a different climate, and there's actually, if you think of catching up to the rest of the sector, there's actually a lot of points up there that it's not, when price is up here, it can't move slow. It's going to have a lot of problems in a good way for if you're in the position of moving slow through this upper area. There's no resistance. It's going to trade like it's at all-time high because the Nasdaq will be at all-time high by the time Amazon gets up there. Okay. Apple is going to trade through this level here and up through here as if it's an all-time high because why? Because the Nasdaq by the time Apple gets up here will be at all-time high, right? Go look at the chart. It's right here. By the time those two fuckers get up there, that's how much money is that? That's hundreds of billions of dollars worth. It's gonna go up there. It's so much money. It's so stupid how much money's involved with just like a 2% move on those two charts, but whatever. AMD, I mean, someone pray for the AMD calls already. Are we gonna go or what? Jesus. Pray for my AMD calls. Who buys AMD down here? It sits in the position. God. Help us. I need what's his name from Archegos to pray for me. Tesla's a weird chart, but again, you gotta go with the swings. EV's a little different. You're not betting on today or tomorrow. If you're in that position. So if you buy Tesla, you're already gone. Your brain works differently. Chimp brain. You just gotta let it do its own thing. These candles are, I mean, these are just bad. I would say that's retail. Retail affecting price a little bit here. Look at that shit. What is that? What is this? What is, we're trending up while going down at the same time? Okay. Who says that? I think LSU, because he's always in Tesla, and he goes, yeah, I opened higher and then I lost half the money by the end of the day. This is why. Look at his charts, right? Look at when you're in Tesla, this is what your fucking portfolio looks like. You're up and then you're down at the end of the day. You're up and then you're down at the end of the day. Fuck that. I don't want to be a part of it. I don't want to do that. I'm just not gonna look. I'll be a part of it. I'm just not gonna look. It's silly charts. Oil does continue, so we're capturing on some of those, but again, oh, okay. This is more important. We are finally getting our clean energy move. We're getting further and confirming more. That's what we need. That's the kind of shit we need right there. Fang. Fang is one of the others that you can trade in more short-term sense as well. We tried to take the trade over on this side. It didn't happen. Tightened. Ton of action over here. I mean, sometimes you just miss it, right? Nothing even happened, but travel continues. Again, those Archegos, silly trades, these candles today are, they offer something. They offer something. They can't be ignored, unfortunately. It obviously goes against all of my understanding to go trade shit like that down there, but you take opportunities when they come. Okay. Travel just continues. Etsy, we're gonna watch for COVID winners. COVID winners are the ones that haven't moved yet. We talked a little bit about you have to look for the next trade after what we have. So COVID winners obviously have entered this longer consolidation, maybe trying to find a place. Investors are trying to find a place still in terms of what their valuation should be. Might be there is something more fundamental about that for sure because they're too new. So that's sort of the problem with some of the newer tickers, of course. Just don't nobody really knows. And I can understand why people would be like, well, why is Zoom like should Zoom really be worth more than Boeing or something? Like some of those ideas really start to throw you. AVTR continues from yesterday. Again, I talked about this yesterday. As soon as it entered the channel, you're golden. Now you're at your high. You're going up to the trend line. You're done. See ya. That's a nice trade. I think this is a nice chart. And I talked about learning from these charts. This is a great chart to learn from because when you look at this, I know there's plenty of you still can't look at the chart and see it. When you look at it through here and you remove these candles, right? Remove what we just see already here. It's really tough to tell what the hell's going on in here. I can understand that. It's so important to realize that what you're looking at here, all these again, remove all of this bid here. You have to be able to somehow visualize what's going on in here and how to trade that. And again, you don't need to find it. It's now when I give you the damn line, you got to visualize it and feel the trade there. You got to feel the trade there because I talked about it yesterday. As soon as that trend line came in, I was like, all right, that's it for sure. That's it for sure. Why? I don't know. I don't know what they do. They sell drugs. I don't know. I don't. Twitter continues 4.5. It looks like it does want the 69er. Give him it. Give him the 69. Snap. Yes, Snap just needs to hold value and it's extremely bullish. For sure. I'll probably post this chart tonight as well. I mean, we were already talking about it, but I've gotten better at after we talk about things and take trades, I then will post the chart once the break does happen. It was difficult with all those preemptive trades to go back and make sure I drew all those damn lines. One thing to have a mental note, of course. But. All right, how far are we gonna go today? 24:30. Mm, what I'm contemplating is I want to take this profit. That's a lot of points. Tough on trades like this where you get a move it's like just exact. Sometimes you're gonna get one of these breakouts and it just then the whole thing just comes, right? And you just get it, right? Sometimes you're not gonna the move is gonna take days, and then sometimes of course you get these short-term patterns that just it just is done. Your move fucking happened. Do we take profit on it? That's always the question. Okay, solar is continuing. Let me see what the ETF looks like. Betting on them. I mean, I brought this up at open. Don't let me down, market. Don't let me down. TGX are still waiting on that 6810. Honeywell continues. Again, our Dow tickers are just absolute nightmares for the market. They're just going to continue. Boogeymen out there. Oh, God. How many points is that? Why is this? Again, look at what's happening on some of these charts I'm posting. Okay. I post this 100-day consolidation. Okay. I post 100-day consolidation, a whole trend through here, and I'm like, yeah, give it 100 days. And then you get something like this here, and that just looks like it's gonna go to the trend line in a few days. It doesn't even look like it's already through the high. It just looks like this is gonna come up to here right now. Crazy. That should be obvious for everybody to see. Diamonds are really over a long time. Definitely easier to see. Nice one. Nice one. Okay. As we go through all-time highs, I'm gonna watch for Palm. We're still waiting on 1573. MKR did go up to that resistance, got rejected. I'm gonna be interested to see what happens when this is a bit of a excuse me, bit of a bearish candle here. Got rejected on the trend line, but it does show that the bid was still here at. This was a 7.5% gain yesterday, and it still went up another few percent to go test that trend line. So that means a lot of bid, but this could turn into a short-term pattern. This trend line into this candle, possible. Going to keep that eye on that, but it's also possible that leads to a gap up because of that. So we definitely want to be involved. I want to mention the CC chart here as well. Again, I know I have a lot of these sort of strange industrial sort of sector things, and they're just kind of they're slugs. But when these breaks happen, it's this. This is why we look for sort of things that are ready, and we're focusing on what's ready to be traded, right? And a good example of one that just it's just it's just there. It's ready to make a move. That's it. That's it. It's through the level. See ya. See ya. BRKB. This chart was definitely more of a. We already took the trade down, or I keep saying we, but I talked about it a ton over here, right? And getting a preemptive trade over here. Now, that was before we even took the preemptive growth trades. Berkshire is not a growth trade, obviously, right? So I had already taken the trade back over here and was holding it. And just, again, like I told you guys, you make a trade and you use this confidence idea and say, well, I'm betting on this is going to go up, so I'll hold it. This move here, I post the pattern because not so much that it's now that we can buy it again or add more or something, but to give us an idea of what's going on over here. I think this is it's not, I mean, it's not so much that you see something look like this all the time. It's just very bullish. And again, what we bet on here was more volatility, and we got more volatility in this last week, right? And so that's within there. It's really kind of against the idea of consolidating if you have a lot of volatility within it. But I think it's still important to note how it could depend and how you could get something like this and how it could be in a lot of traders and investors' minds. Again, all trend lines and stuff are is just the behavior of everybody, right? Of how we judge price. Over here, when you get a lot of volatility, what happens in people's minds? There's questions about what exactly is going to happen. And so price will start to, or things will start to be traded quicker, buying sooner, selling sooner. And then once that sort of dissipates, the breakout occurs. And I would say yesterday's candle was 100% a breakout candle. And so it was yesterday's candle that made me say, okay, you know what? There's something that was going on in here, and people were able to say, okay, this is actually going. And so again, it's not perfect. It's more of, again, the behavior behind all of the trading. It should be looked at in this way. That's what I'm saying. And then this is the trend. This is the, okay, I understand what's happening. This is the consolidation, uncertainty, but volatility, which we bet on it. So there should be more. And I was a little less conservative and put more points on it here than the last time I posted the chart. Last chart was a little bit more long term anyway. We're still on that. We're still on that path, of course. Continue through all time high. What I said from back over here, the reason why I said that for this candle here that I expect all time high to come today uh, is, again, not just because there's no resistance here. We're building support down at this low, but look at this volatility in here, right? You getting like a level of, if it's going to be more take profit and slower day, then you tighten. You're actually going to tighten over here at this level and confirm this as resistance supply. Instead, this was more of a loose factor and more support driven into the all time. Now, whatever the move happens up here doesn't matter how much we melt up, how much we rally, but I think it's important to be able to understand that opening candle. Sometimes it's difficult. You don't really, like this over, you don't have any clue. This is a little bit more helpful. A little bit more helpful when you get this sort of tight into wide move to the upside. You can at least confirm something quicker, right? Better idea quicker. We're all sitting at the high. Let's see how the Dow does coming back into the high as well. 1020. Still have some time left before lunch. Small caps continue to come out of that glut a little bit. Retail banks, oil. Oil, I mean, it's all oil here. But Francis Car G, the resistance. Right on to the 2480. Does it need to swing back down? Or to say, I would say that this candle has made it even more bullish than before, because you get this, again, you get this sort of outside bar, and you confirmed that it didn't turn into a downtrend, and that you have an inside bar which could continue. I mean, the inside bar could be bearish as well, in the sense that this is an uptrend into an inside bar downtrend, but you're confirming again your level, and in that there is something there. Again, this is a part of it is a part of the sector of stuff, or tickers that we like right now. I don't know if it needs to come down here. I don't think it does. I think it can just continue through here. I know it's hard to look at. I would say it's going to continue through there. It's probably already there, actually. It's probably already here. Probably already there. The Even though today has started off really straightforward, again, I talked about a lot yesterday at close, I think. We need to be very careful about things that start to come through. If the market starts to take profit during lunch, you already know that. Okay. You know it now. But there also can be volatility that is just not in the market right now. Right. There's volatility that can come in, and I would say where if you're in a position right now, you're betting on more volatility. And so you're gonna need to be ready for those spreads. Somewhere you're gonna want to take profit and your spread sucks, and you're gonna have to go to the bid and you're gonna feel bad because you just lost a certain percentage. um, those kind of things are that's where we are when we're at all time high. You gotta keep that in mind, and also how things can just sort of whip anytime they want during all time high. If you guys remember when we were just in all time highs previously, we were getting whipsaws every single day, intraday, right? Intraday very quickly. It's really hard to deal with those if you're already in a position and you're not really specifically. It's whipsaws are great if you're looking to buy. Whipsaws suck if you're in a position. You got to know how much of that you can actually handle. And so you don't know what it is until you see it, of course, but you got to just know if it's starting to happen, what are you're experiencing, right? I would say that we're going to get that. It's going to start to happen because people are going to be anxious again, and that anxiety leads to things like whipsaws because people will start to sell and then everyone goes, "Oh, you know what? I'm actually fine. I just ate a Snickers and now I'm good." So, now I'm going to buy again 10 minutes after, right? Keep that in mind. It's it's gonna be this might be where just don't look at P&L. It's gonna be your biggest trait that you can have, which which it should be, but not easy. Momo looks very good. And again, all of these software and tech companies look very good. These are straightforward charts. Level of difficulty is pretty low. Uh, for you guys, a pretty cheap price point. These kind of tech and software companies for sure are not. They're not speculated out of their mind. So MDT CRI says, let's take a look at MDT. MDT through uh, these these tickers that have a ton of short-term volatility, right? But then they climb out of this resistance here. Uh, definitely are nice if you're able to capture that move. Definitely is nice if you can capture. Trend line in here, higher lows. It should start jumping on people's radar. Now you have the thing is on these charts. The thing to remember is that as charts pass their resistance, their retracement. I'm sorry, their retracement level from 2020, that February. As soon as they break that high, they start to rally and they start to become momentum trades, right? So this is all junk, but then it's momentum. This would be an example of something like that for sure. There's things like REITs and things that don't move, and then as soon as they move through that retracement, they start to turn into momentum trades. It's sort of the bet we have on a lot of different value. GRI is through the 93.5, so nice call out. Yeah, I mean, how you want to, it's not easy still looking at these tickers, but how you want to do something like this, again, just comes down to how you trade, right? It comes down to how you trade. What are we at? We're at 32 and a half thousand volume already traded here, and or not already, just that's it. And the average is 572,000. You're not even right. It's very low volume, very low volume, and anything over not over a million to me is low volume. Over $5, just low volume. It's not gonna move very quickly. Okay, not gonna move very quickly. But on the daily candle, it's gonna look like the whole thing moved. Right? It's gonna look ridiculous. So when you look at intraday, it's just you just can't. There's nothing to be done here. It's happened and then it's done. Could be. Look at the spread over here. Almost a 1% spread on a chart that barely moves on a 5-minute candle. Those are not easy. Those are not easy. your variance is just so high on a low volume ticker. CNX continues to do very nice. That is certainly the better ticker that we have for the oil play. ZTO continues. This transportation idea has continued this week. I know it doesn't look good over here because that candle yesterday, but if we sort of understand again, like I said this morning, that there's some things here, transportation is continuing its move. Chart rate. I just saw the ticker that D now is the other distribution idea, right? Some of these charts are coming out of that low, continue to trend. Uber getting very close to breaking this trend here as well. Again, it looked just like growth. It does look like growth, so it's gone from not being growth or value to looking very growth oriented over here. Keep that in mind, how this will move. I would say just compare it to this here. I would just do that. It's a little different in terms of the tightening here, but I would say it's something very similar occurring there. The more we see that climb towards that trend line, if it hasn't already broke on some sort of standpoint. Roku continues, obviously, one of the favorites. It's going to break through all of this mess. That in there. 364, so throw that in there because I mean, interested to see what happens up in this area. Hey guys, Discovery is up 5.5, but remember, Discovery B was up 100%. We'll never hear the story. We'll just never hear the story, will we? We'll never really get to know. Somebody put it on the wrong, somebody bought the wrong ticker. Somebody wanted to bet on Discovery coming out of this chart. This is the same chart, right? This big loss. It's the same on the Discovery B shares, which just give you more voting power, right, for per share. And then this goes up over 100%. We'll never really get to know what the inside scoop is that caused that, but somebody messed up. Now they're over here. They're selling the Bs and coming over to the As. They realize they don't need to vote. Oh, we don't need to vote on that? Oh, okay. Yeti looking cute over here. Very Amazon vibe of consolidation and kind of madness. Not the same, but very similar. Retail stores just, I mean, gone. Look at those. I mean, every time we looked at one of these retail stores and we try to get involved, they just continue that move. I mean, it's silly. They're all silly. Making silly money on silly charts. PDD continuing the move here again. Chinese tech companies were all about travel looking good still. Solar, I mean, the solar side is still definitely it took back some of the loss from yesterday. Still hard to market still doesn't have confidence. Look. We're gonna do this again. CSPR. Tempur-Pedic. The triple pillow top with the free pillow. Just decided it's back from rest. Com has been, of course, a monster of a chart for a long time. I think some of you will. You obviously like this chart a lot. This chart, it doesn't really. I mean, JJR mentioned it because it's going through the 1573. Just an FYI. I mean, I kind of took some liberties on this chart. Let's just be honest. This is not. This is not how it's. I wouldn't probably ever draw like a chart like this. I would never have my channel lined up with the pattern, which kind of defeats the idea of price being in a consolidation in a pattern that breaks levels. It sort of just respects the levels all the time, and so this makes this chart a little bit more on the it depends scale, because all of this was just holding on to this inbound trend line the whole time. And was it really consolidating in here? You could throw on just a continuation triangle over here or something. Sure. And then you don't really have a trend line, and so you don't have a channel based on that shorter of a time frame. But this is certainly true over here. This is certainly a consolidation over here, and so it's really kind of, you know, I mean, what are we doing over here? This is all just gross. It's all consolidation, but you can't just draw. Where do we draw the consolidation over here? There is not. This is really just the tail end of a diamond, and it's not perfect over here and some of the way the lines line up, but I would certainly say that this is all very much in line with the idea behind it, and the levels are true. And the levels don't really fucking matter if the price is over here, does it? It doesn't really matter if it's over here. It's just knowing that this is bullish and this is ready. That's what matters. And so when you try to get confidence on a chart like this, it looks good, but something like this it stands out to me that this does not. There's like a problem with this idea. Like this trend line, I would say is technically more along the lines of something like this. I mean, I was fucking around with it last night just to like maybe do a little chart and something like maybe ladder like this. And then you start to look at this and you can see how these highs connect over here, right? Maybe I can like line this up all the way here. And then it's very similar. Come on, come. And then it's very similar to down here, right? And all of this connects all of these lows down here. But I mean, we really want to get into this kind of, yeah, this fits on a lot of different trends in here. Certainly does. But isn't it a little different now over here? Aren't we a little bit sharper over here? So just keep in mind that this inbound, this white trend line, is a little bit aggressive. A little aggressive. That's what needs to be kept in mind. LSU says Neo. Neo has moved 1.88%. There we go, Neo. Been going bid. EVs, they want it. China wants it. Who we get there today on lunch? I mean, you got to break through these highs here on a trend line perspective, at least. You got to, I mean, it's just the more you zoom out of this chart, the more you realize, like, Jesus, these candles are ridiculous. This is this is it's over 2% here. Just, it hasn't even moved. Barely moved. A lot of points. Still dojied on the average here today. The NASDAQ. Everything holding at that high. Home building continues. Oof. There's that 27. Nice trade. It's a nice trade. We take those. We take those ones. Something like that, you're definitely in. You're definitely in some transition territory at that. Take some of that. Enjoy it. DS is definitely a strange chart, but it's just, I mean, it's gonna make that move. It's going to make the move. It's just at what point? Tough one. T continued retail stores. SPG continue its move. Again, I mean, intraday you're not going to see anything. It's just going to be a trend. So you're either in a REIT's position or you're not, right? But SPG is one of the better ones for sure. ARC ETFs a little slow out of the gate. A little slow out of the gate. You know that does. Expecting inflow. We're just not getting inflow. See, we continue. Been a fun one so far, huh? I like the T chart. Having some fun over there. Collecting all those dividends through our options, obviously, right? Yeti continues. A lot of points. Who's gonna go chase? Who wants it? SE, yeah. Oof. Z is continuing. There's definitely a lot of points that we all know that can pick up points very quickly. Gold is putting some points on, so I mean some of that. Again, I talked about it. I mean, we're just sort of. I think it was 2 days ago, or yesterday, Thursday, one of them talked about. This is such a similar move to what we're seeing. This downtrend into sort of this double bottom idea. It's so similar that from just a chart perspective, even though the macro is completely different, it kind of begs to be bought for some sort of short-term move. Yeah, commodities will go up in price in the future, sure, but we don't. That's a long trade. Not gonna sit in that trade. But there's a short-term idea there. You can trade something like a JNUG and take advantage of that, right? Or NG, right? That I just recently posted. What's going on over there with GameStop? Not sure. Um, And I want to see the tickers that are in this formation here that got beat up yesterday, things like semis and solar, clean energy, intermediaries. I want to see them break this high trend, this trend line through here. I want to see those be breaking through there. So then we can do that rationale of, okay, we're going to discount some of the loss here. We're going to just discount some of it, understanding some of it's whatever we're going to call the reason. But if we get some of this and it sort of recovers some of that, then all we lost was a little bit of time there. Free, heading up to 118.66. See if it breaks through there. This is a big range, and it does roll through, but there's no trend line up here now, so it should be able to continue through. That's the bet. McDonald's. McDonald's continues, of course. The dirty Dow. The dirty Dow. The Dow is at what? Almost 34s? The Dow tickers today. Nike coming back. Retail stores again doing very well. Banks bouncing back. What's not doing as well today? Well, healthcare over here. UNH rolling over, taking its consolidation, its first pullback. How low is it going to go? Unlikely that it gets to the support. It definitely could, but I wouldn't expect it to continue there. BA just trading flat. WBA trading on the trend line. This is going to be a lot of fun over here. Obviously posted this chart. We haven't seen anything. I mean, you get 4% yesterday, so gonna be fun. Give you guys a nice target. IBM obviously never does anything, just does the Dow trend. Who knows what it does short term? Doesn't matter. CSCO, not much. JPM obviously never does anything. INTC, it did confirm the level here. We talked about the big buy day yesterday. It was kind of contrary to the other semis. Nice candle today. Turn that bad boy green. Serum, we're still waiting for. Obviously, still waiting for. We get the nice candle from last Thursday. We talked about a little bit then. This is still really beat up though. A lot of supply in here. Serum is a difficult ticker to understand. Don't really understand it. Walmart continues. Walmart, these candles are really nice. These are a little bit more volatility. Talked about Disney still. You're still kind of waiting for that trend line there for Disney, but higher lows. It's got a bit of a diamond in here. Continuation diamond. Again, everything's breaking out of the same consolidations. We already talked about these tickers that are all doing the same thing here. It's close to being a breakout. That's why we're waiting for these highs to be broken. That looks good. Definitely looks good. What looks good is that on the weekend, not like this weekend or the weekend the singer, on the week, like not strong, the bearish, the red end today. These tickers here are within their move, and it's a part of a bullish move still. It's not like Nike when it was selling through here and you're just kind of what are we doing? Are we oh okay, we're just going back. Not the same as that. Healthier. It was good. I mean, it'd definitely be another lazy day for those of us in position. Uber's very close, yeah. We were looking at. I mean, again, it's there, definitely there. Straight up to the trend line, and again, I talked about this before. The question here is just, is this breaking out here? Is it breaking out here? That's the only question. That's the only question. Or Is it getting rejected right here and it's coming back down here and it's going to continue the consolidation? The timing is kind of the timing's not the greatest because probably going to get take profit on the market today during lunch and tomorrow. It can continue, of course, but just in terms of traditional sense, probably going to get rejected, right? Probably need something a little bit more. It's already done 2.5% today. It's had a very strong day. See what it does. It's very possible that this is a lot of buying here. Not everyone was able to buy down here. I mean, there's a lot of trading going on down here. This is when everyone's buying in the market. That 25th date going into that next week, everyone starts buying everything, and then Uber starts to move in the middle of its consolidation. There's certainly enough to push it. It's just, are you going to do it? A lot of points certainly will be put on if that does happen. I see just continue. I mean, this is just a silly chart. Silly chart. Bill continues. You gotta love our name tickers. Chris, Bill. Bill's looking pretty good. It moves very slow, but it's looking very good. VNet, are we finally gonna? I was gonna repost this chart because, but you can just continue this idea over here. It looks like we're very ready. There's a lot of points to be picked up here. So if you're not in anything, I would say that this is a very short. Look at those ticks come through. Yeah, see you later. That could definitely be going. Tiva, green candle, buy. Baba is moving, as you said. Cree. Yes, yes, yes. VNet's definitely possible right over that level. That just kind of ticked a little too quick over there. I mean, you obviously got a pure rejection on the level, but I mean, to be expected, but that looks kind of quick. Tiva, I mean, again. What are these candles? What is that? What is that? I don't know what that is. Baba. Hey, Baba is moving. Huh. Continues. Free, no. Free, you're still sitting at the level. GRBK again. We're getting up to this level. This is where I'll give it time to go through, but I'll probably take off a lot of that. Just too many points quickly. I want it. Everything catching some bid here. Spot looking good. 4.5%. Spot's trend line comes in at about 310. 309.80. Hard to judge on any of those. There's just no way to tell how quickly it can move through some of that space. Certainly can, but RG, we'll see how quickly that moves up through here. Again, it's you just don't really know how quick it's gonna move through here. Have like an idea, but this could just happen right now on something like CarG. We talked about a little earlier. You just have to be in position. There's nothing. You have to be in a position. I think they've proved the point enough over these last couple weeks that you just have to be in the position because then it gets too difficult to trade the damn thing. Capture it or get left behind. Everything's moving on the tech side. Growth side, specifically on the software side. ARC's getting some flow. This is specifically on the side I'm talking about right now, so ARC W definitely makes sense that this is getting the flow here. Hard to tell how quickly this moves. it probably doesn't move like in a straight up fashion. It does probably trend over a longer time, like it did over here, because it is flows based, and the flow doesn't come in all at once. It goes over time, so that's something to keep. Those targets and everything will be a little bit more. Those are definitely a little bit more specific. SQs continuing off that, and again, we talked about a little bit how the difference here of how you can buy this. This is also very similar to the Ford chart from yesterday, where when you buy this, you need to know that you're holding this. This is on support. You can't go, well, look at it's at 230.74 and now it's at 230.30. I can't hold that. I mean, come on, common sense. If you fucking bought it, you bought it for a reason, right? No, but it's not going straight up. TWLO is going. It's gonna be a fun trade. Hold on. Hold on to your lunch pail. Hold on to your lunch pail because there's definitely no supply up on that one besides this last one, 361.07. See ya. Yellow eyes. It's yellow eyes chilling. It's got a lot of supply in there. STC. Oh god, don't tell me this is moving. Okay, thank god. Similar story. Yellow eye sitting in this whole supply. It's got to get out of there first. Too much supply. Roku heading up to where I was looking for today. How much more travel does this week? I mean, we don't have as many contracts for April, but it's still a ton. So still keep in mind some of the squeeze coming through. Those tickers that have there's just more speculation on them, more options being bought. They are gonna move quicker, right? They're gonna move quicker. Keton, yeah, we'll see if this comes through as well. Again, we're watching those forward winners, see if they can get through some of those levels. Just want to see if they're gonna track with the Nasdaq or not. The average. Take a look at something like Apple for intraday movement. Kind of, it's just part of its trend, and so it's easy to look on the daily. But how do you manage this during the day? This is kind of difficult. You can't be watching this intraday. It's trending up. That's all you need to know. Uh, this is again, it's just too much to be watching. Too much to be watching, and so you're still getting this. You're still getting this on mega caps. This price action. That's just. It's not going to be helpful. If you're already in a position, you're done. Don't need to look at it. But I mean, I don't mean that we can't be looking at it right now, but it just to prove the point that you shouldn't be looking at your P&L of this because, I mean, you're losing 10%, you're up 20%, you lost 15%, you're up 2%. None of it really adds. Amazon, I mean, what the hell's going on over here, right? What is all that? Look at the daily candle, everything's okay. Just interacting with the resistance, but what is all this, right? You're trying to watch this intraday. What are you doing? I mean, you have no clue. There's no one is looking at this intraday. Promise. Promise. This is a little better. 15-minute candles are always better, but we've been having a lot of fun on 5-minute candles. See the world in a different perspective. Roku levels, there's not really. It's just what we were just looking at. Uh, this is really all we're looking at. This 363.87 I just drew here is this high that connects over here. Otherwise, you don't really have anything else. You can try to go into like support mode, and go through here, but again, you don't really have much of anything. You got a zone in here, maybe go put 350, 350 and a half, 350 and a half or something like that in there for some sort of jaded idea for today. But you kind of need this candle in this move to just continue, and it's just think about it more of a all of growth is breaking out right now. So think of it more of the trend line. Otherwise, there is no level. I mean, you get all the way down here, right? You've got all of this down in here that you can try to make an argument for. I think we talked about this a little bit. This down here, this 293 area, with this bounce down on here. This was like your last level of your last resort, and so we took that with the fact that we were buying everything over here, and we liked Roku. Obviously, we took the Roku trade. Mentioned it a little bit. We joked about it the next day. Uh, this is more of our speed levels up here. I mean, you're running into the same problem again on this chart, is that it's all trend line. There's not really, you can try to go 430 and a half, 430 and a half, but those are not even just high wicks. So I would say trend line out of your mind. Again, Roku, it's not like Roku's gonna continue here. Roku 100% will continue here. This level here I'm interested in because this is a level of supply that you're going to have to work through liquidity. There's going to be a bunch of liquidity there. There's going to be plenty of liquidity in here. All trend line. All trend line. But yeah, I love the Roku. This trend's a little sharp. And this wedge here is kind of, I mean, let me see. Because I'm going to have to draw it. I'm probably going to do this. I'll probably do this. Probably do something like this. I mean, I have some other ideas, but I'm not going to throw those on there. You know, you get something like this here, and it's okay that it's not perfect, but it's certainly the idea. Just like the rest of the market. Just like the rest of the market. Get this price move like here. It's perfect. Perfect price move. There it is. You can already call it a breakout, which technically it was, right? Technically it was, but it's not. There's a couple problems. There's a couple problems with with calling this a breakout, and it's because the trend is all the way over here, and so you run into this, like, what are we gonna do here? We're calling this connected now. What is this? This is all connected now? I don't know about all that. But it's definitely the idea. It just, I would want this to be connected, and it's not, so we just understand it, that there's something there, right? We don't need it to be perfect. We just understand there's something there. I don't even need a draw. We just understand there's something there. It looks like the rest of the tickers. That's it. You can stretch this if you really want to, but it's just not gonna feel the same. This is the start of a new move, start of a new pattern in here, consolidating. This would at least be, we want to dick around here. That's 24. Do it from here because 22, 22. Okay. 403. There you go. 20% or 20%, so 18 and 22. 18% and 22%. But it's going to be more violent than that. Facebook confirms test of Venmo-like QR codes for person-to-person payments. Watch PayPal in squaring. Thank you. Thank you, news. Good thing we're already watching it. No, you know what my favorite is? I saw something. What did I see? Fuck, what was it? Oh no, I can't remember. Was it one of the big ones? Or yeah, it was like it was over here when Google was up like 4% yesterday. Like when it just hit 4%. I saw a tweet that was like, "Hey, Google just they just got out of their antitrust case. Google looks really good now. And like, or like, same with growth. It's like, hey guys, like growth looks really good now. I think we should go get it. It's like, wait, are you guys just, are you using news, or are you just, you're like, yeah, the chart does look good now, doesn't it? Which would be fine. But wait, are you now saying that because the news is good, now you can buy it, or wait, what? Can you explain what you meant when you said options were used as hedges? Um, well, options are still used as hedges, but yeah, I can explain the insurance idea for sure. Options are obviously still used as hedges. So you're going you're going long Apple, right? You're buying, you're an institution, you're buying a ton of shares of Apple, right? So you're going long. You're going long with shares, which are what? They offer you exposure to the underlying, and you don't have the risks of options, right? So underlying, you buy shares. You're an institution. Let's say you buy $1 billion worth of Apple, right? You buy $1 billion worth of Apple. But as an institution, you need to do more than just buy $1 billion of Apple. You need to protect your downside because it's going to take a long time for you to get out of it. Think of how long it would take you to sell $1 billion worth of shares. It would take quite a bit of time. And so, since something could happen, there's a tail risk that something negative could happen in your $1 billion long position of Apple. What you're going to want to do is hedge that, right? So the idea of just hedging is that you take a trade that's correlated to the opposite. What's the direct correlation to your $1 billion trade of Apple? Your direct correlation would be to sell calls. That would be the direct correlation. So that you're using you're already covering the calls, right? So you have a long position, you can cover the calls, and so anytime the price goes down, right? Anytime the price goes down, you're making money on that other side, and so you're being protected. That's how options are technically made for, is this idea of insurance. Is that as you go long, you can produce this new instrument that will protect the other side of your trade, and actually allows for some more exposure. It sort of opens up a new exposure for other investors to go pick up those contracts to go buy into your position, which would be them buying long in your position, right? They're buying it for less, but they're actually entering your position and getting demand. And so there is a little bit more of a benefit there, even if it doesn't pay out correctly. But it's basically to protect your margin. So you put $1 billion long into Apple, and you want to protect when the price comes down every now and then over a certain amount of time. And so if in this moment, there's probably a lot of short-term volatility still, right? It's pretty short-term volatile. So here, what you would want to do is probably create a little bit of a larger hedge than usual, because okay, I want to buy $1 billion, but there's a lot of short-term volatility, so I could be down on that. If my average is 125, I could be down into, I'd be willing to hold down into 116. If I bought at 125, I'm willing to hold in 116, but I don't want to lose money all the way down. So what I can do is I can sell some calls. And so that as this goes down, I'm making money. I'm losing money, but I'm not losing as much, right? And so that's what the hedge is. That's the whole point of the hedge. This is done on every single long position by institutions. The reason why you have calls being written is because someone's hedging. Now, there's, of course, market makers. Market makers are trying to fill liquidity, and this is where now we talk about short-term volatility is all market makers writing calls, and squeezes happen, right? But that form of hedging is still done by every single institution and every single big player out there, because you have to protect your position somehow, right? You have to have some sort of hedge against your position, because it's too much. It's just too much money to go unravel all at once. What happens if you have to go sell all that Apple? You're gonna lose a lot of money selling it, because you're not getting a perfect market price, right? You're gonna be, look at Viacom and Discovery. Look at those two charts. Imagine if that guy was hedged, he wouldn't have lost it. They wouldn't have lost as much money. But guess what? They weren't hedged, were they? They weren't hedged. If they were hedged, then they wouldn't have. They would have. You can get something called delta neutral, right? Which is what market makers do. Delta neutral, and that's what the delta means, is that for every option positions, there's an equal shares position, which is what market makers do. So if 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 a market maker writes calls, right, and there's a delta of let's say 50, so zero point 0.5 of 50, that would be 500 deltas. That would be 500 shares to equal that position. And so there's always an equal amount. So you can be perfectly hedged to where you make money on no side, and then you take that scale and you start to tip it to the way that you want to go. And so if you want to go long, then you start to tip that scale and own more shares of the underlying and sell more calls. And it starts to tip that a little bit, and it goes from neutral to now you're more directional to the long side, but you're still protected on that downside, right? And so institutions do those risk reward. They're all risk management. That's all they do. They teeter with that idea of, okay, how much do we want to go from neutral? Here's the delta neutral position. And so it's like somebody will, like, this is how institutions will do it. Somebody will propose an idea. So they're like, okay, you know what, let's go buy spot here. It's moving. Let's get involved. We're willing to buy. Let's say it was from over here. We're willing to buy from 275 all the way up to 300 over this amount of time and buy us everything we can, right? And so then they get that calculation. Let's say they bought $1 billion worth of SPY. Okay, now what they're going to do is that through this average and whatever their average is, say their average is like 280, 285 or something, they're now going to say, okay, based on that, we're going to be willing to hold all the way down here to 250 for this position over a certain amount of time. And then they're going to start to create a risk parameters that equals the neutral of that over that time. So here's the amount of calls we would need to write to be neutral and sell them, right? And then what they're going to do is start to take that off based on timing, because they don't need to be hedged all the time. They don't need to be hedged a year from now. They need to be hedged today and next week, maybe into the next month. And then as that happens, as those expire, then they can start to create the new hedge, right? Start to sell new calls, right? And this is how we understand that the gamma squeeze happens when it gets close to expiration, because this is when those things matter, because they don't need to actually exist anymore if they're not worth anything. So if they are worth something, there is some exposure there. And so that's all they do. They go from that neutral point to then I go, okay, you know what? We only need to hedge this certain amount because this is how much volatility is on average. There is an average that everyone uses. Before the financial crisis, we used the VAR system, and there's a lot of different mathematical equations that we used to use that are defunct, and you can go look that up for pre-Great Recession. We all use the same average. They all use the same average, right? You know what happened was that average, that VAR number that everyone had, and you can actually see it like the moving margin call and shit like that, right? It actually didn't work for what happened in that moment. It actually wasn't tracking. It wasn't ready for an outlying event. And so it wasn't ready for this tail risk event. And so everyone was hedged, right? Everyone was hedged for a certain volatility for the short term. But guess what happened? All of it happened all at once, and the number was nowhere close to the volatility you needed to be hedged against. And so no one was hedged. You know what happens when no one's hedged? Everyone sells everything. And so that's what happened with the Great Recession, right? We don't do that anymore. Everyone is hedged on a different number, still not really hedged enough. And what's the difference now is that you can buy fucking options and speculate on your goddamn mobile phone. You can buy complex derivatives that were once used for insurance for institutions, and you can use it to bet and go make 100% on something, right? We can buy spot down here and make 100% on it in 1 week by buying call options, right? Which are technically someone else's hedge. Someone else's hedge that they're not losing 100% on. No, it's a creation of wealth, because it's not something that's actually, it's just paper. It doesn't actually, it's not a value that actually exists. Those options, they're going to expire worthless. And it doesn't even matter if they did or not, because you took the premium But you didn't steal that money from someone. You didn't take it from someone. If you bought it from a market maker, they profited and you profited. So how'd the money get there? It was created. It's wealth creation. That's how the market works. Wealth is being created. It's not a zero sum game all the time. It's a zero sum game if Brian sells me a call that he wrote. So Brian wrote me a call, hopefully not naked, not naked calls, and I don't mean literally naked. Those of you that don't know, naked calls and covered calls are two different options, right? Two different ways. If you own the shares, you own the underlying, then you can cover those so that you're hedged against your own calls, right? Same idea. Naked would mean you actually don't own it. So if I got paid out on those calls and I was in the money, then he would have to go buy the underlying and pay for it, which would be where the whole zero sum game comes in. Otherwise, just wealth being created all the goddamn time. Options are interesting, interesting to say the least. That I mean, that's where you go read Nattenberg. Nattenberg, he knew, if you read like some of the preface stuff, he knew that options started to get really hot back 80s, 90s, right? Started to get really hot. That people were really starting to enjoy them, to speculate with them. And so even on the trading floors, imagine some of the Red Natberg, imagine being on a trading floor, right? Literally in the fucking pit, trying to write out options like on pieces of paper, and you're trying to buy the strikes, the expirations, and you're trying to get the bid and ask by yelling. And you're trying to get all this shit and do all this shit word of mouth. Imagine doing all that, and it was already getting really interesting and a lot of speculation then back in the pits. So now it's just so much easier to do it, and we have programs that you don't even need to know the math that tell you what you could actually make, right? All of that makes for better betting, right? Like those of you that gamble for sports and shit like that. It's because you can see all of those different parameters and you can do it so quickly that it makes it more accessible, so it turns into something that, maybe it could be one thing, but now it's another. Now it's another. What the heck? How did this happen? Jeez, I'm so bad at texting. It takes me like 2 weeks to get back to people. And there's one buddy of mine, and we'll literally both will take 2 weeks to get back to each other by texting. Like, hey man, you wanna go out for a drink? I'll respond 2 weeks later, like, yeah, let's go out. And then 2 weeks later, he'll message me like, okay, where should we go? Yeah, just been busy. All right, where are we going? Should we book this for in 2 weeks from now, or what should we do here? Oh, God. All right, what are we doing here for lunch, folks? Honestly. We just gonna, I mean, we're on all-time high. Technically, we should just melt through all-time high, right? Technically, we should just melt through all-time high. Hard to tell, though. Again, it's so hard to tell on days that you're not active. Not really feeling You don't get to really feel it. EDD's at 6%. COVID winners are continuing that move up, so these are tracking back. Not sure if there's really things I can. Let's see. Momo continues. That's 1630 is the next resistance there. DS is going. So I talked about this earlier where you just have to get in the position because you don't know. Here's a good example. Here's a very good example. This very good example. You just have to get into that position. There you go. That's a great move. A great move. That's very quick. I mean, I put a ridiculous target on it. Let's be honest. Yeah. Yeah. Less than a month. 35%. No big deal. Nice. That means we're doing okay. We're doing okay. They're bid. They're green at least. The average SMH open lower, but been doing very well. Solar pulled back. It's not. It's just sitting there for now. Travel from yesterday. It's still doing the same thing, and again, it's gonna be. This is so hard to. The difference between all these charts is gonna be so hard to figure out this, and you just can't look at it. You just have to go with it. Really, just gotta go with it. Some of these candles are just strange, and we're betting on price to go to the upside. That's it, right? Shop is about to go to fucking 12. It's about to go to what, 1500. This is the other chart I said from open. You need to just be in it, and that's it. Right? It was right here on this candle, over here. Just be in it. This candle. Why does it look like that? There you go. Nope. What is that? Is anyone else getting this bug? 1555 from yesterday, and then 1005. What is that? What the heck? Where's my 930? I've lost 35 minutes of time. Okay. Interesting. Anyway. Anyway, what I was saying over here when the market was open on this shop chart was that you just had to get into it because it's hard to see on intraday because the price, right? It's expensive, so the volume, it's good volume. I mean, I guess it's okay volume for the price, right? And you just have to get in there because you're not gonna be able to see it until it happened on the daily candle. And hindsight capital will be like, well, duh. No, we knew in the minute that you're gonna have to just buy it. You just have to buy it. Be in there. Hot stocks have been a bit of a slug. It's because a lot of the pricing has been done, right? A lot of the pricing, and then as soon as we knew that there was going to be legalization, right? Oh well, sell the news. This move is still very bullish, though. It's in the same consolidation as everything else. That's probably an important note. Probably an important note. It's in a consolidation, and it's a nice one. A nice one. So that will happen. This is very bullish off here, though. This is a shit ton of points. This is 6.5%. This is 12%. That's another 2%. That's a ton of points. That's 30% in 3 days, and we traded that. So The thing to remember here, especially, is that you're looking at candles that are fucking massive over here. That's 30% in 3 days. This is just consolidating this move very quickly. This over here, we bought this. Again, guys, we bought this candle because we had support on all these charts, right? We bought all the pot stocks. This here, look at the amount of point movement here. That's 80% to that candle. No one held there. It was over here. 68% in 1 week. 68%. That's an ass load of points. That's ridiculous. On this chart, that's insanity. Absolutely insane. Pot stocks, they're getting ready for sure to continue that move. Definitely getting ready. HTHT does look good. That's a nice call. Again, that travel side. That's more on the China side, of course, but definitely adds some spice to it. Yeah, two for one exactly. It's kind of like Neo, but Neo's not doing anything. PD is sitting right on that 42.31. It's a weird time now. It's lunch though. It's not going to be able to. I mean, it's testing it now. Be interesting if it does it going into lunch here. Continues that move. These software companies and like companies, right? It doesn't matter if it's lunch. It literally doesn't matter. These individual companies, it doesn't matter. They will just continue in that moment. That's where you come back at close. You go for a run or something. You come back and there's something that's up like 5%. And you're like, what happened there? But some of these are going to do that. Some of these are going to do that. Like ZS here is probably going to be that one where it just fills this whole thing in a few hours, and you'd be like, what the hell just happened in here? I was going to buy that at close. Well, you should have bought it at open. That's unfortunate. Shop less so because it's fucking big, right? The big boy caps are not so much going to melt like that. Yeah, calm sitting underneath. W day. That's good. W day. Push through. Uh, same thing applies. Same thing applies. These can move. Look at that spread. That's a 0.5% spread that just came off of one tick, right? But it'll be interesting to see if that melts through the day or not. Hmm? MPA got rejected on that trend line to start the day. Very cute. That means this trend line is the trend line, and it didn't need to be, but it definitely is. It opened right on resistance. Interesting one. That is an interesting one. You can take that trade right on support, I would say. BJ taking some profit from the big day yesterday. Obviously posted the BJ chart. Again, pretty aggressive. Pretty aggressive. But until this order stops, it's going to continue to go. Yeah, yeah, we're definitely getting the lunch vibe. The lunch vibe is in. Everyone, everyone left. Everybody left. Look at that, choppy, trading flat. It's gonna look even worse. Nothing. Nothing. These are one. This. Yeah, these are not even the sizing in here. It does look like there's more movement, but the sizing in here is even smaller and tighter. There's no spread. Everyone already left. Let me open this up. Sitting in the dark like a mongoloid. We do have like Fed minutes and stuff like that, but there's really nothing to note from any events this week. We had the IMF fund and shit like that. I mean, there's nothing. We just had all the important stuff done. So CrowdStrike is an interesting one. This is again all these growth tickers coming out of here, but this is gonna get squeezed a bit more. Put all those points on. So I mean, it's still in one of the in the last year. It's still one of the in the top. May even be in the top 5 of most points put on in the last year. Top 10 at least. Then this consolidation, it's going through the same motion as the rest of the market here. It could have got down here, but this is very bullish through here. This trend line break could definitely be a lot of fun in here. That's through. Yeah. Broad Strike is definitely an interesting one. Another one that you'll probably get a chart for now. Again, we were buying everything already. Things are just giving us confirmation now. A lot of these just had to be bought already. I didn't buy CrowdStrike. It definitely looks nice though. Someone's making money. They're gonna go. Supply is kind of screwy in here. Definitely got up here. 228 area. 198. I mean, that's gonna president breakthrough here. 34. Oh, that's easy. That's a little sharper than usual, but that looks fun. That looks fun. The continues. That's through some sort of its area. I mean, again, there is some supply through here. A little bit of supply through here. But other than that, not much. Not much. All trend line. All trend line. They're just at all-time highs chilling, I guess. Just sitting right at the high. RBK through the trend line. Oh, Jesus, here we go. Just about to get. Fuck. Fuck, fuck, fuck. Um, Let's say on this though. I think what I'm gonna do. I'm gonna do. Do we take it all, or it's so hard to say. Really don't know. Really don't know. And take all the Aprils. Don't have many. Mays are only up over 100. Don't think it reacted. I'm gonna give the Mays a chance. Took the Aprils. Gonna give the Mays a chance to continue. We'll call it good. Call it good. So during lunch, gonna be watching some of these software companies that are trading in between levels. See if they start to melt through here. Obviously, watching the same for growth overall, but uh, we're expecting things that are all-time high to be melting more than those that are not, because these do uh, they, they're gonna just kind of do what they do, but it's really dependent on the ticker itself. So things like Apple probably not gonna melt as much during lunch here. They'll put the points on later from open later on a day like today, I would say. But those individual those smaller companies, not just compared to mega caps, everything's small, and that's what I mean. Everything else, see if those melt or not. Want to at least see value being held. We have some more things coming up to resistances. There's going to be some things that have to be done. Um, is there anything else to Arc going to be watching for that to see if it gets a float during the day. If there's periodic orders on those, check that at close anyway. Chinese tickers I'm interested in on some of these, whether or not those keep going as well, because that depends on if they have orders going through like every 30 minutes or something as well. I'm gonna be interested for those because you should be able to see those really easy on those tickers, because that would mean there's preemptive trades that go from Asia right now before they're even open. So those are important, I would say. Z's one I'm definitely watching for to get more value out of there today if that's really going or not. Oh, the other things like Vips, Discovery, Viacom, these could be very sneaky today, so I'm gonna definitely be careful on those because I am dicking around with those, having some fun. CrowdStrike's really interesting. Uh, Looking at just these two levels, this trend line, this resistance here, there's a lot of open space. You're gonna get squeezed here again. You've got you've got 10 days or so until expirations. You're right in the zone of squeeze central. So some of these are going to be making moves more than others because of the options. So those definitely matter. Watching gold and silver as well. You need to look at anything else. Nothing much moving. Nothing much moving. Melting around. Again, technically you should melt up during lunch. Technically you should, but again, like I said, I mean it doesn't really matter. And I think there's definitely a difference between megas and not. And then specifically again, some of those smaller tech companies I expect they should melt, whether the average does or not. I expect those, and then China getting orders or not. Visual says Baba. Baba's continuing to get some, so it's like this kind of thing. Like you can just tell that there's orders just still coming through. There's not. It's not so much like a question of is this still climbing or not? It's still climbing. It's climbing. I know it doesn't look like it's that fast, but it's continuing to climb here. It's coming off of some shitty price action. So it's more about seeing consistency on these type of tickers more than just seeing something drastic happen. Like this is just drastic. This is not consistent orders. They lead to more volatility on these tickers. Yes, we bet on more volatility, but we're betting on a directional sense still. If there's no direction, then it doesn't matter if there's more volatility or not, right? This means we're dicking around doing nothing. So uh, these things like Bidu, Billy, right? What we're looking for. We're looking for some. Bidu's a better example, but there's some other things that are obviously affecting that based on some different news and shit that was being priced through here. This is consistent though. It's at least trending, and you're getting some sort of idea, right? We're looking for on an intraday at least. I don't think we have much else. There's not much else to mention. Again, another just kind of chill day as we've. This is what we do. We do the hard and heavy lifting when it's the moment. You gotta know. Just gotta know when, right? You gotta know when, and so being in a position. Uh, I mean, I don't know how you guys are doing. I mean, you guys share what you want, of course, but I would definitely say that everyone should still, if you were in positions here, you should still be in most of those positions. And I would have to imagine you're doing pretty fucking well. To be honest with you, you're in positions here. We're not talking Joe Schmo 30%, Joe Schmo 50, right? We're if you're in just about anything, at the money to 3 months out, you definitely have gotten 100%. You definitely have. You definitely have. Even on things, I'm trying to think, like, even if you just went very basic, I think you're there. And then if you went into more leveraged ideas, you're really playing with fire over here, and you're doing some considerable things. And this is where that pushing things really to the edge. The difference between taking this over the Qs, so QLD over the Qs itself, is another 100%. It's another 100%. The difference between those two plays is 100% on top of the other 100%, right? And so that's where, if you're able to make some of those trades, now you're getting into some very risky stuff that but what you're trying to do is push that risk to the edge, right? And my last note is just, I mean, guys, these recent charts that I've posted have really taken off, and you're getting instant moves. I know it's hard to get there, but I've talked about this a lot recently, where when I post a chart, it's much more common now that the price will continue after the breakout, when it usually doesn't. Usually you get a big breakout buy day, it's going to take profit, and then we buy on that take profit and pull back. It's been very much consistent and just go, which is why we did such a big preemptive trade back on like March 25th, and in all the growth, we started buying everything down there, because it's been so momentum based, and based on every time there's a breakout, everyone just starts buying. Hard to go buy in there, but you have to be you don't buy, you're not gonna be a part of the move, right? So you just got to get in there. You just have to get yourself in there. And so uh, I know most people, everyone here is trading, but for other people and stuff as well that listen, whatever, uh, proving the point of capturing for sure, and how we've. I mean, it doesn't get better. There isn't a better. There's just nothing better. There was no better time. Uh, I mean, there's just nothing better. This is it. This was it. Taking those trades, that was it. That's the best you can do. It's literally the best you can do. And now it's what's the best we can do here. Now we're managing in the moment. We're going to push our risk to the absolute utmost, but we're going to take this money home. No matter what, we're not going to lose this money. So those of you that are up a lot, beat yourself first, right? You got to, that voice in the back of your head that wants to do something stupid, stop them. Let it run till it doesn't run anymore, right? You can tell the difference between a guy with no legs and a guy with legs, right? Lieutenant Dan rolling by and then Forrest running by. You can tell the difference. Not one's better than the other, but just the difference. You know when the market's not doing this. You know it. You know what it feels like. As soon as you see it and you feel it, that's when you can take it. Otherwise, push those winnings and let that shit really make a dent in your bank account. That's for sure. Definitely, and again, there's more, guys. Price is not going to stop. So even if price starts to take profit somewhere, again, it doesn't stop. We get ready for the next. We load back up, get ready for the next move, whichever way it's going to move. But price is not going to stop. So it's really easy to look at this and where price is going to stop and say, well, then I'm done. That's great. But you're going to keep going, right? You're not going to stop. So it's all important. Again, we have charts from we have a lot of charts. There's a lot of different times that price breaks out. We take it each time. It's the same every time. Repetition. This is no different than the last time. It's no different than the last time. No different than this trade here. No different than this trade here. No different than anything, right? It's all the same. All the same trades. And it's always going to be the same way. And as long as you take out that bias from yourself and just look at it as price, it's all the same. And so you can make the same unbiased decision every time. So that stuff like this, you can take those trades and make good decisions. And right now, you're proven right, because as long as you don't interfere, as long as yourself is not interfering with the position, then price is paying you, and that's it. You're just getting paid for it. But again, as long as you're not interfering, and I'm even talking about myself, as long as I don't interfere, it's good, right? So enjoy your lunch. Ryan says, enjoy your lunch. Thank you, sir. Drink some water, get some damn exercise, right? And I'll see you guys this afternoon.